Finally, we have some clarity, John.
Yeah. Yeah. Not in commodities. We don't. We are going to dive into the core numbers 2024, 2025 corn, two huge crops. Why I don't think this is anything like the last 2 years, and you shouldn't mark it like the last 2 years.
Can't wait.
Welcome to Hedge Heads, where hosts John Prischmann and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, it's hot.
37 degrees to 90. I mean, that's what we get. I actually was I got to a balmy 51 on Friday, and now it's 90. That's what happens every year here. It just keeps doing the exact same thing over and over again.
I like to call it the new normal.
The new norm. Yeah, and what's funny is you feel all this heat, you'd be like, I'm going to drive around and see all this stuff pop, all this stuff out of the ground. Look at all they feel. Nothing's out of the ground around here yet. It was planted, 3 weeks ago? 2 weeks ago at the most. So it's behind, but now it's not going to be behind.
My lawn was not behind. I can tell you.
Yeah.
Or it was behind. It's not anymore.
Yeah, the lawns will, but we don't have moisture here. And then if you look at the U.S. Drought Monitor, what's interesting is it doesn't show much going on in North Dakota, South Dakota, Minnesota. And I can assure you this is as dry as it's been in a spring in a very long time, maybe ever. You go at the lakes, you can kind of judge depths by your boat lift. Like, when your boat goes on and off and when it's going to get tricky. There's people already, some of my friends on like a lake like Ottertail, where it's already not, the water's already too low for their boat. One person is pulling their pontoon off because it's already too low to get on for the rest of the season. So they're not even going to put it on the lake, which is kind of incredible. But my point is these are really rare occurrences. So with this heat, and it's not going anywhere anytime soon, by next week, it'll flip-flop from too wet and cool to, it's never been wet here, to it's too hot and we're going to need moisture. But that's what happens every year. We're going to be arguing about tassels that are too tight.
Too tight tassel.
We're going to be arguing about wind knocking stuff down. Heat dome. The heat dome. We haven't even begun the talk of this. And that's what brings me to my topic. Let's compare this year to the previous 2 years and try to figure out what corn's going to do here, or at least let's hash out the differences, because this could be the difference between marketing very well and the other side would be assuming what's going to happen the last 2 years is going to happen this year. And I got the numbers. So we're going to dive into numbers, do some comparables. Now, here's the one main thing that I think is way different. Let's talk about what's the same. The good plantings. 2024 went excellent. 2025 went even better. 2026, dare I even say it went better than 25. Like, we got this acreage in. It's all in. It went in very easy. So that side's bearish. Now, what's very, very different is the oil price and the outlook on Iran. Clearly, this is not wrapped up. Although every single weekend, it seems like we get the deal is imminent. It's within 48 hours. It's going to be signed. And the oil market so far has believed it. But even now, like, that happened again. It was down $5-6. And now it's come back and it was down $2.30, $2.50, somewhere in there. Still at $94. So that's very different than $60 oil or $50 oil that we just had. And the other thing would be in 2024 and 2025, it was apparent that it was going to be a very big crop already. And especially, I think 2 years ago, 2024, there was a bunch of rain. It was perfect. And then it kept on raining in the forecast. Like, you had, every 5 days there was another front coming with a bunch more rain. So 2024 started going down basically starting today. It's actually at a very similar price. And it went down all the way to $3.95 by August. The previous year we went down to $3.95 by August. You're thinking, oh boy, if corn's up here at $4.80, I better get short this corn market. But that's not what I'm driving at all. We in 2024 and 2025, we knew a big corn crop was coming because the weather was perfect. Now, that's where I think this year is starting to differ. The West is already nothing like what we've had for the previous 2 years, where the West enjoyed a lot of rain, a lot of feed, and we've had just bonanzas for yields in all of the West. Kansas had 1 billion bushels, I think, corn production last year. That isn't going to happen this year, unless the pattern changes. So the West is way drier. And that's not noticeable yet because this stuff's barely emerged, but it's going to become noticeable, I think, fairly certain. And then we went to 395 by August both years. But here's the important point that I'm going to make really quick is that we were quickly at 430 or 440 shortly after by September. So even though we touched that scary number, by the time you had to deliver your corn, the worst you were going to do was 430 futures. You would have had to mess up pretty bad to get worse than 430. The year before that was 440. So you're talking about a 40-cent gap to what you could get the last 2 years on two huge crops that started out perfect and remained perfect the whole time, and there was no question.
So you don't want to buy a 40-cent put?
No, that's there's just what's the point of covering this downside when you have oil at $94? I'm not saying it can't go to 395, but you're going to have an economic meltdown to go down there and stay down there. And
there's a possibility.
That's a possibility, with the oil price being where it is. But with oil where it is, production shortfalls on oil around the world, although people argue, but really when you're missing barrels of oil, it's going to catch up with the market eventually. And if that were to intensify, they would most likely end up buying oil and the grains again. So you have all this potential, and then you look at the time of year that we're at. We don't know what this weather pattern is going to be. It's nothing like 2024, 2025. So don't use the last 2 years as your template what to do this year. Now, it could end up being that way, but it's really not comparable to the last 2 years. So what should you do? You're at the whim of the deal is on, the deal is off, and it's really hard to plan. But again, you're going to want to see the next 3 weeks before you're making a lot of decisions in production. And we really have held off on the marketing side of stuff here, just advice wise, because this market has such potential to go higher. Now, I'm not near as big a fan of soybeans, and we are 20% there. And I think a guy should hurry that up. But I think guys are really underestimating what this corn can do. We had 170. We had a 179 yield in 2024, 179.3, and I think that was a record. And then 2025 was 186.6, which blew the doors off everything. We don't know what the yield's going to be here. If we're in the 179, it was a great yield 2 years ago. It would be a great yield this year. If it lands there, we're not going to, we have no worries about the price, at these levels. Like it's going to be around this price, off and on quite a bit. So to give up on a crop that has all this potential, but at the same time, this is where we started selling off for the last 2 years, which is unusual. Generally, it's more mid-June to later June that sell-off starts. Last year, it definitely started, or it was 2 years ago, it started to the day, almost the identical price, and went straight down June and July. And the year before went down June and July as well. I just don't think we're in that same situation at all. And that's really what I want to get out here. And I'll obviously let you talk a little bit. But I wanted to get out that this is a crop that has a lot of potential. I feel like there's not a lot of news out there other than the Iran and oil. But I think in the next 2 weeks, we are going to have a lot of news. And the West is what you want to keep your eye on, unless we start getting rain in the West. And when I say West, I'm talking Nebraska, Kansas, North Dakota, South Dakota, and even parts of Minnesota. And there's no worries right now because everybody's got okay moisture. But I do think that that's where we differ from the last 2 years is we don't have that moisture in the forecast that was always driving the price down. We just don't have that this year. I think that's the major difference that we have so far is the pattern's different and we have oil a lot higher and it could go a lot higher by midsummer. We're still in the camp, kind of hold the line here because for that 40-cent gap that we're talking about, it's just not worth giving up all this upside for that 40 cents. Now I can say that's, sitting here and that's easy for me. when you have all these, the farm risk and you have all these expenses. But that's my point. You have all these expenses. Why are you giving up on this crop when you have such potential, especially when the weather's not perfectly cooperative? But it's kind of in a unique year. You'd think they'd be like over exaggerating the dryness in the West and already trading that, but they don't really need to. Like, this stuff just got planted. We're in May. There is no worries, and there shouldn't be a lot of worries yet. But I do think that's going to change a lot in the next 2 weeks, and that's my opinion, and that's kind of my call, that this is nothing like the last 2 years, and you shouldn't treat it as such. We were sitting here talking about this a year ago, last year, and you could tell it had a lot of potential. Like, it just kept raining. There was more rain in the forecast. All I did was mow last summer. All I did was mow until July. It quit raining in July, and that's what I did the year before. But last year was something special. It rained for everybody all the time. We just don't have that going on. What's your thoughts?
Wow.
Yeah, that's a lot. That's a lot.
So
put it out there.
Buckle up. I'm going to share some not breaking info that will blow your mind.
I'm ready for it.
All right. So I like to say I pride myself on looking at both sides of everything, right?
Well, you have to.
You have to. But the reality is, usually I still have a bias one way or another.
Me too. Yeah, me too.
Right?
I think everybody is.
But you say you're looking. This year, the market for the last 3 months, since that 70-cent down day that didn't go anywhere on soybeans, at least since then, I have zero opinion on either direction. There are arguments you can make to go either way
very easily
on everything.
Last year, it was easy to say this was going to go down because of all the rain in the forecast and the perfect plantings. This doesn't feel like that at all.
No, this year is crazy in that I can make reasonable arguments for either side, and it makes it very difficult.
And that's kind of where I land. It's like, what if we get a 178 yield, which is spectacular? The West is real dry. The East kind of makes up a little bit for it, and we're still not breaking records at all. But to assume that we're going to get 186 every year is, I think, a stretch. I mean, I think last year was an anomaly because of how perfect the weather was from the second this thing started, and we're already not getting that. So let's just say we're at the 178, which is an excellent. That we're at this price all day long with the 178, assuming acreage doesn't go up. Acreage could go down 1 million acres for corn. And then we have that 178, and the numbers go right out the window that we have right now. This 1.9, we're going to be 5% less. Stocks to use ratio has been 13% the last 2 years. We're looking to go to 12, but that could easily slip to 10 or 9 or 10 very easily with any bump in the road. And again, back to oil. I guess if you're under the opinion that this is going to ramp up in the Middle East and oil is going to go down, you'd want to hurry up your marketings. I'm not of that opinion, but that's just what that is. That's my opinion.
But you can even make that argument. Like, okay, war ramps up in the Middle East and oil goes even higher, but that hurts the economy so bad that everything tanks.
And that's what happened.
Right? Or it can go the other way. Oil's going to go up. It kind of stays even, and it buoys all the grains, all the commodities up because of inflation.
Yeah.
You can easily make both those arguments.
And I think that you're seeing this inflation happening. The transit companies that transfer basically everything you need to live and eat instantly gets that extra fee on the gas, right? And then in turn, they aren't going to absorb that loss. They're going to transfer it right to you. So with higher oil prices, higher transportation costs, quickly inflation goes up very quickly. And I think that's the phase that we're in. What I don't like about the grains is how they anticipated that and they got very long. Now, are they wrong? Are they just plain wrong, or are they just early? I just think they're early. I'm not as bulled up on beans as I would be with corn and wheat in the situation that we got going on. And then you have the fertilizer situation for next year. That's already playing out. It's playing out in South America. What's going on? How much are they going to buy? And how, if their production costs are going higher, our competitors, then we can float everything up. And I think that's what's happening in the world right now. That's why I just am not in a hurry on this. It just seems very wrong to think this is going to collapse quick, like higher oil collapse, the economy right now. I think you wait till the economy starts collapsing, then really start marketing. And I say that, and it sounds silly, But this did happen in 08, and we have talked about it. This happened once, and it did collapse the economy, and it did go from $8 to $2.97 very quickly. So you need to be flexible and switch gears. This is not an easy market. If you're confused, which I can tell by the phone calls that people are, because if you go online, you're going to find any flavor that you want.
I'm confused.
Yeah, we haven't even got to the weather, which is going to make it more confusing. It's confusing going into the weather window. But the market is trading that this is all perfect and everybody's got ample moisture, which I kind of find surprising. And you got to be careful looking out your backyard and saying it's dry. But this is as dry as we've seen it in this region. And North Dakota's been getting some rain, and South Dakota too, but it's just getting drier every day. And now this heat's really going to dry it out. I think you have a weather at least scare this year. We haven't had one for 2 years. I don't think it's going to be as perfect. Wheat is a true mystery. We have supportive numbers, but if we go too high, we sell no wheat. But at the same time, I don't see this as the old wheat market either because of the Kansas failure. It was crazy for them to admit in the first report that a third of the crop is basically lost. You don't see that in the USDA's numbers, and I think that's important because they appear to be getting out ahead of what looks to be just a disaster crop. But it's a unique market where, like, if this was Russia, it would be cruising because the world buys a lot of Russian wheat. But the world doesn't buy a lot of our wheat. It becomes more of a domestic thing, and there's a lot in domestic storage. So are they going to be willing to bring this up on speculation that it's going to get tighter and tighter? That's the part we don't know. And wheat tends to be a very hard trade, but don't underestimate what we can still do. Even though we're heading that seasonal where we harvest it and it goes down, it's very capable of going a lot higher than this.
Trade wheat, sleep in a mansion.
Yeah. Yeah, no, that is definitely not a saying that, well, a few guys, but the majority of wheat traders would laugh at that. Yeah, it's 90. It's beautiful. The stuff's going to emerge, but I think we're going to go right back to the weather markets and arguing about the weather and the impact that it's having on yield by the end of next week. I'm surprised it's taken this long. Like I say, we'll be arguing about too tight tassels. What were some of the other ones last year? There was a lot of different weird things last year. Southern rust. Not that there wasn't actual problems, but it gets to be amplified, of course, online. So you had southern rust wiping out half the crop, and the other half got killed by too tight tassel. I don't think they had much to talk about last year. I think that's why we had those stories. The rust was probably a real issue.
Yeah,
but
it turned out okay.
The yield sure did turn out okay. I just think that, looking at these numbers, and basically 440 to 450 has been readily available for the last 2 years on two gigantic corn crops. I just don't know why guys would hit the panic button. The question is, can you buy puts and make money this time of year? The last 2 years was, yes, this is exactly when you should have been buying corn puts or marketing corn right before it fell. But I have been saying this and I stick with it. I think this year we're looking at a different scenario totally. I don't know the market's fully understood it yet. I think the funds did, and we've talked about this. They put a lot of money in, and the farmers took the other side of the trade is essentially what has happened here with their physical crop. But I think the next chapter is yet to be written here. I don't think they plunged a bunch of money in. We got a deal signed. Oil goes to $60. The weather's perfect. And we go down here from corn. That's just not the side I'm on. I think it's going to be a lot of the exact opposite of that side.
It will be very interesting to see.
Yeah. And it isn't that predictable. Like, we don't know what's going to happen in the Middle East, but there is a pattern forming here where we have a deal that's just a matter of minutes from getting signed to the next day, Iran saying that we're miles apart and we're barely even talking. Lies, and more lies out of all sides for various reasons. But as you'll notice, oil's continually ratcheting up. And I've been saying I have a hard time marketing a lot here when oil's continuing higher.
Yeah, I would agree with that. What about from the cattle side, John?
Different pattern there. Talk about a different pattern. So we've got record-breaking cash, and futures do not want to go higher. Another reversal today. one of many. Now, is it they see the border opening and they know, or the insiders already know? Is it that the drought pulling the stuff that we were talking about, the drought pulling cattle in early because there's nothing to feed? Does that sound like a 186 yield to me? It doesn't. It doesn't to me already. So you're getting more cattle coming in, or not placed, or being placed early. And you saw that in this report. So it ignored the report on Friday, which would be considered bearish. Longer term, that's not necessarily bearish, but it would be for the next few months. So very different pattern there. Like the funds don't want to be long cattle anymore, whether they think it's going to be higher feed costs, higher oil costs affecting the consumer. It already is affecting the consumer. It seems to be pricing in something that we haven't seen before, like just softer demand. And you are seeing softer demand. And that's how markets end. It can end with an event, or it can end just like it's happening right now. But not a healthy look, though. Today, another big reversal. I think the front two contracts closed down June and August, and a bunch of feeders. Did they end up staying down? I think
the front month did. But
okay,
August did.
but they've also been buying these dips. Right? They've been buying these dips. But what's different a little bit is any of these dips, when cattle's been doing this in the past, every time they started buying the dip when it looks like it's gotten too cheap, it's just gone straight up. This time it's not doing that yet. Hard to hedge this, use this as a hedge right now because we're so underpriced, but that's the market you got. It's not a great hedging market. It was about a month ago and now it's not. But we are seeing different pattern there. It does not look like the same market, doesn't trade the same. But yet cash is at records, so they are futures and they're anticipating something. We'll see if they're right. I have a feeling that fundamentals are changing here, and I think it has a lot to do with oil and the economy. I think it's just not selling near as well as it was. You also have industry problems with packers and profitability. And again, I understand that they've had plenty of profits for plenty of years, but you're seeing problems with these packing plants and labor disputes, and I think that's going to continue on. But yeah, just a little bit of a different pattern. I just still am thrown off by how this whole grain thing and all this stuff, like the talk and all this stuff is really quiet. Do you think it's the confusion that's happening where, like, I think people have no idea what this is capable of right now, and you're just not even seeing the arguments on Twitter hardly.
Right. That has been interesting. This, I mean, in a good way.
Yeah,
it's actually been quiet on both sides.
It has, and I think people are kind of in a wait and see mode, like we are. We've really been in that mode. I sent a little update out on a Friday to kind of let everybody know, like, we haven't forgot anything. It's just when there's nothing to do, you don't just put out stuff and lead people into trouble because you feel like you're compelled to put stuff out. We're watching oil, and it's hard to market when oil is going higher. But I do understand a farm that has to lock in profitability, and I definitely wouldn't talk a guy out of that. I just want people to recognize how much potential this is, even though that's not a real mainstream opinion right now. And I don't like that July is at 25 cents under December full carry. I am well aware there's plenty of corn around. There's certainly a lot of corn around in this area. As a matter of fact, we probably have the most in the entire U.S. right now, judging by our basis. So it's not that, it's the potential this has to be, to change it, quickly change into a different market. And we're already seeing that with wheat. It just feels like the beginnings of a bull market emerging here. Even beans I've been really down on. Unless their acreage goes up significantly, they're going to have a bid under them, with the China stuff finalized, even though they're already not even buying the 25 million metric tons. Right. But I think that China could buy corn. I mean, me, I'm generally permanently bullish or bearish, especially corn lately. But it just feels like a turn is happening here, and it's a hunch more than anything. Don't market off that. Don't trade off that. This is just a hunch. And I think you kind of feel it the same way, but you just feel these markets are different and they are trading different. And I don't think that's going away anytime soon. But I also don't like the full carry in the markets, and I don't like the gigantic fund position this time of year. It puts it in a very vulnerable spot. But it feels like just, even if it comes down right now, it's probably just going to be a rough patch. This doesn't feel like the last 2 years at all. It really doesn't.
Yeah. I mean, I would agree with that to a certain extent.
Yeah.
Watch the outside forces could change this very quickly.
You do need to take it day by day. And if there's a lot of rain in the forecast, that changes things as well. So it's really a day by day thing here. It's hard to speculate in the market. It's hard to hedge in this market. It's just not been easy for anybody. And I'm glad I haven't run into like a lot of problems with like a lot of, short calls that are way in the money. We don't know if they're going to be hedges, and now it could fall away from that, and we can't hedge because we've avoided all the problems, but eventually you do have to pull the trigger. But you know what? Are you going to get 480, or are we going to see 530 or $6 and beyond?
$9.
I don't $9. I don't remember a year quite like this where you had all this potential because of so many outside influences, and we haven't even got to the weather market yet.
Right.
So it's unique that year. That it kind of reminds me of the Russia-Ukraine stuff, but we were at very elevated prices when that was happening, and we had lower U.S. supplies. But this feels like it's building into like a larger issue with food security. At first, I thought this was going to wind down pretty quick, and they do what they need to do on both sides to get a kind of a deal signed. And it just doesn't feel like that anymore. But again, check with me in 24 hours. It could change again.
Right.
I just still think the old rope-a-dope, where there's a deal just right around the corner. And then, and then them saying the next day, of course, there's not. I think that the market's going to quit believing that unless there is a deal, and the oil is going to start walking up. But, I've also been very wrong on oil before. Which doesn't make this easy. So the advice is just market incrementally when it makes sense on the way up. Now we're back on the way down. I'm sitting on my hands. I'm going to see the weather for another week before I make any decisions.
I would agree with that.
Yep.
Well, John, anything else today?
Yeah, hopefully it wasn't too confusing. The main point was, that this year is not like the previous 2 years weather-wise at all.
Yeah.
And you throw in all the rest of the stuff we're talking about, I want everybody to get maximum amount on this crop, but I just don't want to talk guys out of market either. And that's not what we're doing here at all. I just don't think we've seen enough weather at all to be marketing, but that's my opinion. And we'll put out the insider this week, and we'll already have different weather forecasts than we have today. So just get ready for getting ready to market. But I just doesn't feel like we're there yet. And hopefully, like I say, it's the reasons we're clear enough why we feel this way.
Absolutely. All right. Why don't you leave your number, John?
218-731-1578. And feel free to call. It's been pretty quiet. If you have questions on, what our actual outlooks are, and, we're pretty vague online here or on the podcast, but, reach out. You don't have to be a client, and we'll tell you exactly what's kind of happening, what we're hearing, all that kind of stuff that you really can't say on air. Anyways, just give me a call or Ryan.
Thanks, John.
Sure.